Hi students, good day to all. In this video, let's see how to prepare subsidiary books. So, subsidiary books is one of the record prepared in the fundamentals of accounting. So, in a big concern, big business concern, there may be the same transactions are repeated again and again. For example, purchases. They are purchasing in different date and different times. So, in a month, there may be purchase maybe for 100 times only if it is a big concern. So, if you are writing journal and ledger, it take more time and it take more cost. So, to avoid this, for maintaining time consuming, cost consuming, they are preparing subsidiary books. For a particular repeated transaction, they are using separate books. For example, purchase. So, they are maintaining purchase books. All purchase transactions are recorded in the purchase book. So, it is easy to refer also. So what are the kinds of subsidiary books are available? That is purchase book, sales book, purchase return book, purchase return book, sales return book, bills receivable book, bills payable book, cash book, and general book. So this is the general journal. Apart from these transactions, other transactions are mentioned in the general book. So purchase related transaction are mentioned in the purchase book. Same sales. Purchase return means goods which are purchased from our suppliers. It may be returned some of the reasons. It may be returned some of the reasons. It may be defective goods or some of any reasons it is returned. So every purchase return are mentioned in the purchase return. Same sales return. The goods which are received from our customers. So it is mentioned in the sales book. Sales return book. And bills receivable book. Bills receivable means it is the business concern drawn bills on their customers. So the customers or endorse the bills and accept and send it to the business concern. Okay. So all the bills receivables are mentioned in the bills receivable book. Same bills payable. It is endorsed to our suppliers. So that is all bills payable are mentioned in the bills payable book. Next, cash book. So cash book is very important one. Most of the business transactions are with the cash dealings. All cash transactions are mentioned in the cash book. So the cash book is divided into three type of cash book. One is single column. Second one is double column cash book. And third one is triple column cash book. Okay. So what is the differences between these three? Single column cash book, double column cash book and triple column cash book. All the transactions of cash dealings only enter in the single column cash book. Okay, got it? Double column cash book means the transaction which is the cash transaction with the discount. Okay, so discount may be given to our customers while selling the goods. Same discount may be received from our suppliers while purchasing the goods. So all the cash transactions with the discounts are mentioned in the double column, cash and discount. In single column, only cash. Okay, got it? Triple column. So what is the difference? Triple column means cash transactions, bank transactions, and then discount. Okay, got it? That is triple column. The transactions which is with the cash, bank, and discount is mentioned in the triple column cash book. In this video, we see how to prepare the single column cash book. Okay, it is one of the subsidiary book. Single column cash book is like a cash account in the ledger. You know, all of you know about the ledger accounts. For each journal entries, we are preparing ledger. So one of the ledger account is cash account. Same cash account. Now we are writing single column cash book. Okay. All the cash transactions are mentioned in the single column cash book. So first we know the format. The single column cash book is divided into debit side and credit side. So in the debit side, we have to mention the date of the transaction, particulars, what is the transaction, and LF. LF means ledger folio number. Okay. And amount, what is the amount of the cash transaction. Same in the credit side, the column is divided into date, particulars, LF, and amount. Okay. So now let's see how to prepare the single column cash book. So on 1990 May 1st, cash balance. So in each and every problem, first they are giving the balances. So balance, cash balances, always it is debit balances. Okay. So cash is the amount which is in the hand. So it is debit balances. So cash, all the debit balances mentioned in the debit side of the single column cash book. First mention the date 1990 May 1st. Cash balance brought down. Okay, balance is mentioned as brought down. So what is the amount? 1000 rupees. Next, on 2nd May, goods sold for cash rupees 1700. That is selling goods for cash. Okay. So what is that journal entry we are writing? Cash account debtor to sales. This is the journal entry for sales. Okay. Cash sales. So cash is on the debit side. So we have to take on the debit side. May 2nd. What is in the opposite? The cash received for sales. So to sales. What is the amount? 1700. Okay, students, got it? Next one on 4th, purchases for rupees 600. So what is the journal entry made for purchases? Purchases account debtor to cash. If it is cash purchase, purchase debit, cash credit. If it is credit purchase debit, the particular name where we are purchasing, the supplier name is mentioned here. But only cash transaction are mentioned in the single column cash book. So this is cash purchase. So cash is on the credit side. So we have to take on the credit side. On 4, opposite it is purchase. So cash paid for purchase. By purchase, amount is 600 rupees. Okay, students. So next one on 5th, received from Sam rupees 700. So cash received from Sam. When the cash comes inside the business, what is the journal entry? Cash account debtor. From where we are receiving? From whom? That is to Sam. We are receiving, the business concern is receiving cash from Sam. So Sam account is credited. Cash is on the debit side. So on the debit side, what is in the opposite? Sam. To Sam. Sam received from Sam. Cash received from Sam. So it is to Sam. Amount is 700. Seventh, paid cash to Naresh. The business mentioned paying cash to Naresh. Cash is going outside of the business. So to whom the cash is paid? Naresh account. Naresh is the receiver. So Naresh account debtor to cash. Cash is going outside of the business. Okay. These journal entries are writing by following the basic rules of accounting. So to cash. So what is the amount? 250. So cash is on the credit side. Then we have to write on the credit side on date 7. In the journal entry, cash is on the credit side. So we have to take a credit side, which is in the opposite side, Naresh. By Naresh. So cash received from Naresh. Rupees 800. Okay, next on 10, received cash from Arun. So what is the journal entry? Cash received, cash account debtor. From whom the cash received? To Arun. This is the journal entry. Okay. When cash receiving, cash debit. When cash paid, cash credit. Okay. So we are receiving the cash from Arun. Cash is on the debit side. So on debit side to Arun. What is the amount? 800. Here is the amount is 250. Next one, 115 deposited into bank. Cash deposited into the bank. Who is the receiver? Bank is the receiver. So bank account debtor. So cash is going out of the business. So cash is credited. So cash is on the credit side. So on the credit side, I want to mention the date 15. In the opposite, bank. By bank. What is the amount? 1200. Okay, students, got it? And next transaction. 19. Withdraw from bank rupees 400. This is the opposite of this entry. This is deposited amount into the bank. This is amount withdraw from bank. So what is the journal entry? It is reverse entry. Cash account debtor to bank. So cash is on the debit side. Then we have to write the date on the credit side. What is the opposite? To bank. Amount is 400 rupees. Okay, students. It is cash deposited into bank. This is cash withdraw from bank. Next one, received dividend on shares. The business concern received cash for dividend on shares. Okay. So what is the entry? Cash received. So cash debited. Cash received as dividend. So dividend on shares is credited. Okay. This is the income. So particular income have to be credited. If it is expenses, particular expenses have to be debited. This is income. So particular income, according to the rules, all the incomes are to be credited. So cash comes inside of the business, so it is debited. So cash is on debit side. Then on the 22, what is opposite to dividend on shares? The amount is rupees 600. And last one is paid rent rupees 400. Cash paid for rent. Rent is the expenses. So particular expenses have to be debited. Rent account debtor. Cash is going out. Cash account credit. So on the cash is on the credit side. On credit side, 30 by rent. Cash paid for rent. The amount is 400. So every transaction with the cash is entered in the single column cash book. This is like a cash account in ledger. Okay. But the double column and triple column cash book are varied. Okay. So now we have to tally the single column cash book. So first roughly we have to total both sides. On which side is the highest amount, that amount had to be write on both sides. So in this, debit amount is higher than the credit amount. So 1,200, 3,400, 4,200, 5,200 is the amount. Same amount have to be mentioned in the credit side. 5,200. Now we have to find the balances. What is the difference between these two amounts? So 2,750, that is on the last date of the month. So May 31st. By balance carried down. Okay. So it is difference between this amount and this total amount. So that amount have to be taken to the next month on June 1st to balance brought down. That is 2,750. Okay, students, got it? This is single column cash book. In the next video, we will see how to prepare double column cash book. Okay, thank you.